Hey everyone, welcome back to Corporate Decoder, the place where we decode the sometimes boring but always telling world of corporate filings. Today we're diving into a proxy statement from Comstock Incorporated. No, it's not related to that Comstock, but prepare for a deep dive into mining renewable energy and executive pay that might make your head spin. This document is a Schedule 14A, essentially a proxy statement. It's what companies send out to shareholders before a big meeting, giving them the chance to vote on important decisions. This one's for Comstock's annual meeting coming up in May of next year. Shareholders get to vote on things like electing directors, ratifying their accounting firm, and of course executive compensation, meaning how much the big bosses get paid. So what's on the agenda for the meeting? First up is electing 7 directors to the board. Think of these folks as the company's governing body, making the really big decisions. Then they want shareholders to say yes to keeping Assure CPA LLC as their independent accounting firm. Basically, these are the people who check the company's math to make sure everything looks good. And last but not least, there's a vote on executive compensation, a non-binding say-on-pay vote. It's advisory, meaning the company doesn't have to listen, but it gives shareholders a chance to voice their opinion on how much the top executives are making. Here's a super important note. Brokers may not vote your shares of common stock on the election of directors or the non-binding advisory resolution relating to the compensation of our named executive officers. This means if you own shares through a brokerage account and don't specifically tell them how to vote, they can't vote on certain key issues like who's on the board or whether the executives are getting paid too much. Make sure to give your voting instructions. Let's answer some of the burning questions that shareholders might have. One big one, what exactly are we voting on? Well, it boils down to those directors, the accounting firm, and executive pay. Simple enough. Now, how many votes do they need to actually hold this meeting? They need 1/3 of all the outstanding shares to be represented, either in person or by proxy, which is what the proxy statement is about. If they don't get enough participation, the meeting can't happen. To get elected, a director needs to win a plurality of the votes cast. That sounds fancy, but it just means that the people who get the most votes win, period. Anything shares not voted on don't count, but what about the accounting firm? Ratifying their appointment is a bit easier. They just need more votes in favor than against. Abstaining, meaning not voting either way, doesn't affect the outcome. It is the same with the non-binding advisory resolution relating to the compensation of our named executive officers. So how do shareholders actually make their voices heard? They can vote during the virtual meeting, which is held online, or they can vote by proxy, registered shareholders that is. People who hold stock certificates in their own name can fill out a proxy card and mail it in. Shareholders who hold their shares through a bank or broker called street name shareholders will get voting instructions from their bank or broker. For those interested in accessing the information online or getting a paper copy, the proxy materials and annual report are available free of charge on Comstock's website. Now let's review the board nominees. The board recommends shareholders vote for all the nominees. Corrado D. Gasparis, age 59, brings more than 37 years of experience. Leo Drozdov, age 59, has served as a director since February 2018 and has extensive experience in Nevada's mining industry, including engineering, legislation, environmental regulation, economic development, legislation, and environmental regulation, economic development, legislation, and historical preservation. Kevin Chrysler, age 59, has served as a director since October 2005 and brings extensive management experience, as a director since October 2021. Walter Martin Jr., age 78, is a director since October 2005 and brings extensive management experience. Yolzev, director since October 2005 and brings extensive management experience. Jose, director since October 2005 and brings extensive management experience. Zelza, director since October 2005 and of industry entry 2 and brings experience in sustainability. The board has determined that Messrs. Drozdov, Martin, Nance, and Salinas and Ms. Slanina are all independent directors. To be considered independent means to not have any relationship that might interfere with their ability to make unbiased decisions. The company is led by Corrado D. Gasparis, who has served as both executive chairman of the board and chief executive officer. The board believes this structure is appropriate. The board thinks that the current leadership structure shows everyone, employees, suppliers, customers, that the company has strong leadership. Here are the executive officers: Corrado D. Gasparis, Kevin Chrysler, William McCarthy, David Winsness, Rahul Bobili, and Matthew Bieberly. It is useful to understand that the first 5 were awarded sizable performance bonuses in 2023. Mr. Bieberly was only hired in November 2023. This section discloses any potential conflicts of interest or deals between the company and its insiders. We see transactions involving Sierra Springs Opportunity Fund, or SSFF, where the company's CEO also has a leadership role. There are also transactions involving Flux Photon Corporation, or FPC, where the company's chief technology officer has ties. These kinds of relationships aren't necessarily bad, but they need to be disclosed to ensure transparency. The company made payments for the metal recycling furnace totaling $375,000 from an amount not exceeding 20% of excess cash flow generated by Comstock Metals LLC. Contributed the furnace to the company. Sevelseed contributed the furnace to the company. Based solely on our review of the forms required by Section 16M of the Exchange Act, we believe there has been compliance with all filing requirements applicable to our officers, directors, and beneficial owners of greater than 10% of our common stock. This means all the people who need to report their stock transactions have done so properly. This table tells us who owns the most stock in the company. It breaks down the ownership by directors, executives, and anyone owning 5% or more of the company's stock. Kevin Chrysler owns 1.9% of the company. David Winsness owns 0.7%. William McCarthy owns 0.7%. William McCarthy owns 0.6%. Rahul Bobbili owns 0.4%. Or directors and executive officers as a group own 4.5% of the company. This report from the Audit and Finance Committee is important because it provides oversight of the company's financial reporting. We are told the committee recommends that the board include the audited consolidated financial statements in their annual report on Form 10-K for the year ended December 31, 2024. Here's a breakdown of what they paid their independent auditor, Assure CPA LLC. Audit fees were $275,887 in 2020-24 compared to $2,000, $2,000, $2,900 in 2023. Shareholders are being asked to ratify the appointment of Assure CPA LLC as the company's independent accounting firm. The board and Audit and Finance Committee recommend a vote for. Let's talk about the money. This table shows the compensation for the top executives. In 2024, Corrado de Gasperis, Kevin Chrysler, William McCarthy, David Winsness, and Rahul Bobbili all made $495,000 in salary. This table provides information about the company's equity compensation plans, which are used to incentivize employees and directors with stock-based awards. Currently, under the 2020 equity compensation plan, the number of securities to be issued is 128. Here's a look at how much the directors are getting paid. Leo Georgioff earned $200,000 in fees and $47,700 in stock awards. This is the say on pay proposal. Shareholders get to vote on whether they approve of how much the executives are being paid. It's non-binding, but the company usually takes it seriously. If shareholders want to propose something at next year's meeting, they need to get it to the company secretary. Comstock is using a notice and access system, which means they're providing access to the proxy materials online. So after digging through this proxy statement, what's the big picture? Comstock is asking its shareholders to approve some pretty standard stuff, elect directors, ratify the accounting firm, and give an opinion on executive pay. The company seems to be trying to be transparent about its related party transactions, which is always a good sign. Now, it's important to note that the board recommends yes votes for all proposals. Ultimately, it's up to the shareholders to decide if they agree. While the financials may seem standard for this stage of the company, the board recommends yes votes for all proposals. Ultimately, it's up to the shareholders to decide if they agree. While the financials may seem standard for this stage of the company over the finish line, thanks for watching. If you enjoyed, please subscribe, like and comment.